Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is a special edition where our focus is on the Q3 earnings. The company on our radar is Bank of India, which came out with its earnings, and we did see a sharp improvement as far as the bottom line is concerned. The Q3 net profit jumped about 62%. This time around on a standalone basis for the company is reported an 1870 odd crore rupees of net profits coming in. This was largely led by the support from the provisions as well, a decline in provisions for the non-performing assets and a write back in provisions for standard advances as well. However, we've seen a slight dip in the net interest income that the bank has earned in this quarter, about 2% year on year, and even on the NIMS front there is a slight dip. To discuss more insights from the quarterly earnings and the outlook going forward, I'm now joined by the top management of the company. Mr. Rajneesh Karnatak joins in. He's the MD and CEO of Bank of India. Welcome to Business Today TV, sir. Good to have you with us. Very strong beat on the bottom line front. If you could first detail for us what really worked for you in this quarter as far as the profits are concerned.
Yeah, as regards profit are concerned, over a healthy business we did for Bank of India in these 9 months. So if you see our total business, we have touched our total business at around 12,76,000 crores, out of which our deposit touched the figure of 7,07,000 crores and advances at touched the figure of 5,65,000 crores. If I give you incrementally the increase on the advances side has been around 57,000 crores and on the deposit side at around 54,000 crores. So overall the profitability has been there, though there has been a little bit of dip in the net interest income, as you rightly said, by around 2%. But if you see on a 9-month YOY basis, the net interest income has improved. Similarly, the operating profit, though it has dipped on a sequential basis, but on the 9-month basis, on a year-over-year basis, again it has improved by 14%. So on the net profit side, again the improvement has been there, as you rightly said, around 62% on a YOY basis, but on a 9-monthly basis, the net profit has improved by around 83%. So overall the margins have been good and the profitability is there for the bank.
Right. So you did mention, sir, that this time around there was a downtick in the NIIs. Could you give us an outlook going forward from here? Do you see an improvement going forward?
Yeah, so there is some liquidity constraint in the system, as you are aware with the RBI data also on a year-on-year basis for the January number, first fortnight of January which had come. So the credit growth had been at around 20% and the deposit growth in the system is at around 13%. Similarly for Bank of India also. So there is some liquidity pressure in the system which was there in Q3 and which we see in the Q4 of FY24 also. So there will be some pressure on the net interest income per se. But as a Bank of India franchise, since we have around 5,200 branches, 8,000 plus of ATMs and CRM machines and 19,000 plus of business correspondents, so 32,000 plus franchisee which we have to serve our customers and improved in customer service which we are doing. We are very sure that we will be improving our CASA numbers, the CA and SA numbers and also the retail term deposit. So if you see our December numbers, 44% of our total domestic deposit is CASA deposit, 44% of our term deposit is the retail term deposit and only 12% is the bulk deposit. So we are making all efforts to reduce the cost of deposits and improve the yield on advances so that the pressure on NIM does not happen in the Q4 of this financial year.
Okay. And on NIM, sir, what is the kind of outlook that you will have and what is the band in which that you can see the NIMs over the next 2 or 3 quarters?
So there was some pressure in the NIM, frankly speaking, in this quarter Q3. It has dipped from, if you see from the sequentially from the September quarter. But on a 9-monthly basis, on a year-on-year basis, our NIM is at around, global NIM is at around 3% and on the domestic NIM is at around 3.2% and the international NIM at around 1.25%. So we'll be protecting this NIM, as I said, through our strong franchise which is there, the retail franchise which is there, and also on the advances side. So we have decided that 55% of the book will be RAM book for this financial year, which means that better margins are there, yield on advances are there on the retail, agriculture and MSME side, lower slippages and lower stress book, which again will lead to better earning assets and maintaining the NIM margins which are there. So we'll be trying to protect our NIM margins for FY24 during this quarter also.
Okay. What is the credit demand right now that you see, sir, across the board? Which are the verticals that you're seeing a stronger demand emerging? What's the sense that you can give us for the next couple of quarters coming forward? Where exactly is the higher demand really going to come in from?
Yeah, so Q4 is always a busy quarter for the banking system. So for Bank of India also we have a credit pipeline of nearly 50,000 crores which will get disbursed in the coming 2 quarters. So that apart, see we are seeing a good credit growth across the board from the Gati Shakti which is there from the Government of India, the PLI sector which is there also proposals are coming. On the infrastructure side there is we are going for proposals in the private power utilities and central power utilities. Road sector is there, ports are there. Apart from that, as I said, steel is there, metal sector is there, and also textile sector is there. Pharmaceutical sector is another area. Warehousing, EVs are also there, where the growth is there. Apart from that, there is also growth from the EPC sector also, where lot of contracts are getting out on the infrastructure side. So EPC growth is also there. Demand is also there for credit. So overall, there is robust demand for credit for Q3, and we hope that the same will continue in the Q1 of FY25 also.
Okay, got that. As far as the unsecured book is concerned, could you give us a sense of how much of that accounts in your total loan book, sir, as of now? Why I'm asking this is that 6 months down the line, we had, the RBI issue strict guidelines for the unsecured book. And I wanted to understand, it's been quite some time. Have you assessed the impact of the RBI's measures on this book so far? If at all, what has been the impact? And going forward, how are you looking at this space emerging?
Yeah, so RBI came out with the circular on unsecured loan on 16th of November. So as regards Bank of India 31st December number, so on the personal loan book, we have a book of around 8,600 crores only. And just to give you a sense on the personal loan book for Bank of India, so we have raised the interest rate of 50 basis point on the personal loans now. Apart from that, the entire personal loan book, which also includes credit card outstanding. So mostly this book is for the salaried class customer only, and where the cash flow is coming, the salary is coming to our saving account. So there is a clear visibility on the cash flow side over there for the bank. So cash flows are there and the salary account is being maintained with Bank of India. So that kind of credit mitigation and guardrails we have placed on that book. So this 8,600 crore of book for our December global loan book comes to around 0.7% only. As regards the NBFC unsecured book, which was there involved in the 16th November RBI circular, our book is at around 33,000 crores as on 31st December, which comes to again at around 6.5%. So aggregate book on the unsecured side for Bank of India on the global side is around 7.5 to 8%, which is not a very big number. On the NBFC side, majority of our book which has come is on the AAA and AA side only. So we do not find any challenge or anything in that. Just to clarify, on a selective basis also, we have increased the rate of interest on the NBFC, on whether it is a A-rated NBFC, AA or a AAA rated. Case to case basis, we have increased the rate of interest, and whatever the RWA increase was there, which was coming to at around our risk-weighted assets have increased by around 9,000 crores because of this guideline. So that impact on the CRAR also we have taken. So our CRAR, which is now you see on the balance sheet at 16.06% as on 31st December, is after this impact of this circular, which reduced the CRAR by around 45 basis points.
Okay, got that. So also if you could give us an outlook on the new financial year that we are now approaching, FY25 versus FY24, what are the growth levers that you're looking at, and will that year turn out to be a better year for you? It's been a stunning year for the PSU banks on the D Street, especially for companies like you. You performed very well over the last 1 year or so, 80% or so. The stock prices have surged and the entire space has been buzzing in space. This is the hottest space that all the investors have been looking forward to. How do you see the new financial year panning out for all those investors, again looking very keenly at this point in time? Your fundamentals are coming out, your earnings are coming about, and who are looking at a future investment prospect. What would you want to say?
Yeah, so if you see the macroeconomic picture, so the macroeconomic picture is quite robust. So credit, if you see the GDP numbers are also pegged at estimated at around 7%. Global economy will also be, as far as the GDP is concerned, will be growing at around 3%. And also the fiscal deficit numbers which the government has given in the budget, they are also going to come down to a certain extent. With all this kind of robustness which is there in the economic system and the kind of collection efficiency which we are seeing and the recoveries which we are seeing in our NPA book, so definitely FY25 will also be a good financial year for the economy and also for the banking system.
Okay. And, just lastly, sir, I think the upcoming week will also see the RBI come out with its, policy decisions as well. So far, the kind of, status quo measures that the RBI has had, now looking at the UFOMC meeting also happened in the previous week. How do you expect RBI to move forward with the policy decisions, sir?
So as regards rate cut from the RBI side, we do not foresee any rate cut in this quarter, but definitely going forward in the next financial year there shall be and there should be a rate cut. This is what we see.
Okay, fair enough. Well, many thanks, sir, for being with us on this very special edition. All the very best to you for the upcoming quarters, and here's hoping for more interactions going forward as we continue to understand more insights own bank and from the industry perspective as well. Good to have you with us on Business Today.
Thank you so much for calling me here. Thank you.
Thank you so much. And with that, we wrap up this very special conversation with